What's up, trader? One of the easiest and incredible way to trade the market is combining long wick with the short wick candle. Why? Because when you combine long wick with the short wick, your chances of winning become double. You probably have watched my long wick candle trading strategy that I posted long ago. If you haven't watched it, I will link it above. So in this video, I will show you how you can combine long wick with the short wick to find incredibly profitable trading opportunity. As soon as you finish this video, you should be able to apply the strategy. Make sure you stick till the end to grab everything I'm explaining in this video. Before I begin, make sure you smash the like button, hit the subscribe button if you haven't done yet. This is Forex Wizard from Forex Trading Wizard Academy. With that being said, let's get started. Okay guys, so this is an incredibly easy trading strategy. Make sure you stick till the end to understand what I am explaining. So first let me explain the strategy in a simple diagram, then we'll jump onto the chart to understand how you can apply this strategy. Now first of all, you can see that this is a diagram, simple. What we see that there is a long wick candle and followed by a short wick candle. Now the first thing is how you can understand a long wick candle, or what is the definition of a long wick candle. Now the way we will identify a long wick candle is we will give you 3 seconds to look at a chart. In these 3 seconds, if you can spot a candle standing out from all other candles, then we can say that a long wick candle. We'll see in the real chart. And the next thing is we'll be wait for another candle to come around 50% of this long wick candle zone. Let's say if this is the long wick candle, and if we see that this long wick candle has, let's say, 375 pip, now we will be waiting for at least half of this candle zone, the next candle to come and to create another long wick candle. And then as soon as we will find along the direction of the trend, then we will be selling this market from here, stop loss above the long wick candle, and we will target at least 1 to 2 risk to reward ratio. And this is the simple strategy. Now this setup is for the bear market. When you see a downtrending market, this is the setup for that. But if the market is in uptrend, let's say if we see an uptrending market like that, then just the other way around, we'll look for a long wick candle like this, a big long wick candle that will stand out from any other candle. We need to wait for another short wick candle to be formed along the zone of this long wick candle. So we'll wait for at least half of this long wick candle to be covered by the short wick candle. And then if it is in the direction of the trend, that is, if it is an uptrend, then we'll be buying from this zone. We'll buy, and our stop loss will be below the long wick candle, and we'll target at least 1 to 2 risk to reward ratio. This is the simplest strategy you will ever find. Now let's jump onto the real chart to explain to you how you can apply this strategy straight away. Okay guys and girls, so let's start with this example on gold on 15 minutes chart. As I told you, this strategy works in any instrument in all time frame. So I want you to make sure that you stick till the end to understand everything, so that as soon as you finish watching this video, you can apply in your trading straight away. So I'll give you 3 seconds. Let's spot the long wick candles that you can see in this chart. Now if we spot this, easily you can identify this candle here without any question. Long wick candle, there is one here, there is one here that you can see easily without any question, and there is one here. Okay, now let's first of all start with this long wick candle. Okay, now what you see that after this long wick candle, we had two conditions to fulfill. That once you see a long wick candle like that, what is the next condition? That we are combining a long wick candle with the short wick candle, right? Now for the short wick candle, it has to go at least 50% of this wick, and then we need a rejection, right? Now what's happening with this one here, that after this long wick candle formed, we have seen a long green candle almost crossed almost the whole body of this long wick candle, and we haven't found any rejection in this 50% of this long wick candle. So we'll not take this one as our long wick and short wick strategy. Now next, what happened? Look at this one here. It's a big narrow long wick candle with this green candle. This is the perfect one that we are looking for. Now once you saw this long wick candle, what is the next step? Is to look for the trend. Now look at the trend, which way the trend is on gold. You can see that the price was creating nice looking series of lower high, so the trend is down. So we have found a downtrend, we have found a long wick candle. Okay, so the next step is to wait for a rejection. So what we have seen, the price basically, if you replay this chart, what you can see that the price basically, this is the long wick candle. Once you found it, we have to wait for another one to go at least half of this long wick candle and to reject again. So what do you see? The next one exactly what we expected, around 50% or more, and then rejected. Once you found that candle, the next step is trade it. How do you do that? Take this short from here. We'll short this as soon as the candle close. Our stop loss will be above the long wick candle, and every time we have to have at least 1 to 2 risk to reward ratio to be profitable in this strategy. So we see that this is a perfectly profitable trade setup. Now let's look at the other example. Okay guys, so the other one, as you can see, this is the other long wick candle that we have seen clearly standing out from all other candles, and also in the direction of the trend. The trend is down, and we have found a long wick candle. Once you found the long wick candle, what is your job? Is to wait for the price to retrace at least 50% of this long wick candle. Now once you found, if you replay this chart, what you can see that you need to wait for the price to go up until, if we don't see the retracement, as you can see, the price came exactly almost more than 50% of this long wick candle, and we have seen that a short wick candle has been formed, exactly what we are looking for this strategy. Once you found this, once this candle closed, our job is to short, stop loss above this high, take profit at least 1 to 2 risk to reward ratio. We see that this one also a nice looking profitable trade. Smash the like button. Now let's see what is the other long wick candle is doing. Now this is the third long wick candle that we have seen so far. Now what about this one? Will we be trading this long wick candle? The question is no, we will not be trading, though this is a long wick candle and the other one came down almost more than 50% and rejected, but it still will not be trading this candle. The reason is it is not along the direction of the trend. The trend in this market is down, but this long wick candle is against the trend. That's why you need to keep in mind the rules that long wick candle at least 50% retracement along the direction of the trend. So now let's jump on to another instrument to see more examples. Okay guys, so let's see this example on British pound US dollar on the 15 minutes chart in the same way. So with 3 seconds time, which long wick candles you can spot, easily identifiable. One you can see here, a very long wick candle, and the other one is here. Anyone can identify less than 3 seconds, and these are the two candles that you will be considering. The first one, this one, will not be trading this long wick candle. There are two reasons why. The first one is it's against the trend. We see the trend is up. As you can see, the price was creating series of higher high uptrend and also higher low uptrend, and at the same time we see that with that long wick candle there was no significant retracement to the upside, as we need at least 50% retracement of this long wick candle. Now this one is gone. What about this one? This is satisfying all the rules of this strategy. What is this? The first of all, as you can see, this long wick candle is standing out from everywhere, and then this is along the direction of the trend. As you can see in this zone, we see the price was creating series of lower high and then lower low downtrend, exactly what we need. And we have seen at some point the price came to the same zone, as we know that at least 50%. So if we draw a 50% zone for this long wick candle, this is the 50% line for this long wick candle, and we see exactly to the same zone there is another candle came and created a short wick candle, exactly what we need for this strategy. So once you found the short wick candle, what is the next job? Is to going short from this zone. This is the zone where you will go short, stop loss above this high, and we will target at least 1 to 2 risk to reward ratio. As you can see that it is an easily achievable profitable trade. So now let's look at some more examples to program your mind so that you can straight away use this strategy. Okay, so let's look at this example on EUS 30 in 15 minutes chart. Now as you can see, this is a clearly visible uptrending market. The price was creating series of higher high and the higher low. So this is an uptrending market. Now with 3 seconds, which long wick candles you can spot, easily identifiable. You can see that there is one here which is an absolutely long wick candle that is easily visible, and there is one here that we can see on the chart, and we can't spot any more long wick candles easily. Now as it is an uptrending market, we will be considering only buying in that market. So with that said, let's see what happened with this long wick candle. You can see that the price from here, there is this long wick candle has been created, right? Once we found the long wick candle, what is the next job? We need to patiently wait for the price to come back to this same zone and to at least 50%, and then to create a short wick candles. Now what we have seen, let's draw this 50% line for this candle, and we see that the price came to the same 50%, a little bit of less, came to the same 50% zone, and from this zone we have seen a nice looking short wick candle. Pin bar has been created. Once this short wick candle created, we know that the trend is up. Okay, there was a long wick candle, there is a double rejection, means that there is a high probability this price will go up. As the long wick candle has been created, will go long. As soon as the candle close, stop loss below this long wick candle and take profit at least 1 to 2 risk to reward ratio. And as you can see that it is also a nice looking winning trade. Now what about this one here? We see the same long wick candle, but there is no trade for this candle. Why? Because we need the price to come back to the same zone and to create a short wick candle, but the market didn't do it. The market will never do all the time exactly the way we want. So that's why you need to set alarm or whatever way you observe the chart. You need to wait for the condition to be fulfilled before taking a trade, without taking any blind trade, if you use this specific strategy. Now let's look at more examples. Okay guys, so let's look at this example on Aussie dollar. What we see, if you look at this chart here, you can easily identify the long wick candle that you are looking for. Within 3 seconds you can see, easily spot this one, and we have seen couple of here. So let's start focus on this one. This is the longest candle in this zone you can ever see. So what we see that this long wick candle has been created. Once we have seen long wick candle, what is the next step is to look at the trend. Now we can see easily visible downtrending market. This is a downtrending market. We have found the long wick candle. What is the next step is to wait for the price to retrace at least 50% and then to create a short wick candle. So let's draw this 50% line and then wait for the short wick candle to be created. Once you found this, now where is the short wick candle is being created? Let's look at this one here. You see this is the long wick candle, and let's replay the chart to find out the short wick candle. Once you found this kind of long wick candle in the direction of the trend, wait for the price to go there to retrace at least 50% of the short wick. So we have found that with this doji, this is a short wick candle, and we just crossed the 50% zone of this long wick candle, and this is a short wick candle that we are exactly looking for. Now once we found that, we'll go short. As soon as the candle close, our stop loss will be above the long wick candle, and we easily can target at least 1 to 2 risk to reward ratio for this trade. And you can see that this is easily achievable profitable trade in this direction. This is how you easily can combine long wicks with the short wick to find an incredible profitable trading opportunity. I sincerely believe that this important strategy video was helpful to you. If you find value in it, then don't forget to subscribe, and also don't forget to smash the like button. Thank you for watching, and also watch these 2 videos will be helpful to you. I'll see you soon in my next video.